Are we good? Okay, excellent. So let's get started here. Let's start with the dollar. By the way, before we get started, just want to make sure you understand if you have any questions or have any markets that you want me to look at that I'm not pulling up, just let me know, and we can deal with it here in these sessions. You know, we've got a nice small group, and we can accomplish a lot. The goal here is that you are, understanding the strategy that we employ here, and achieving, the financial goals that you have. If you're not, we need to deal with it and fix something. Make sense? So trading is not that difficult. It's all about just following the simple rules. And yeah, and there you go. All right, let's start with the dollar. So we see we're getting a nice rally in the dollar, which is not a surprise because remember our last couple sessions, we know that we do have this supply up here at about 103.40. So that is likely where the dollar is headed. But that's still about 2 full points, 2 full dollars from where the dollar is right now, meaning there's room for the currencies against the dollar to decline that much. But then if and when prices get to this supply zone, and I know we're not close to it, but I'm not sure when we're meeting again, that's when we would look to buy other currencies like the euro, yen, Swiss, pound, and others into demand zones. Make sense? So that's really all I have to say about the dollar there. So let's why don't we start with the euro? And again, I can look at any markets you want. We don't have to keep this to the currencies. We can also look at the spot FX markets. We can look at the FX futures. Either is fine. So here is the euro. Looking at the euro futures. And again, for years now, we have been very bearish the euro, and the charts, even though the market is down as much as it is, and you can see down here on the weekly, I'm going to make this a weekly chart. Next to that, we'll have a daily chart. As low as the euro is, the chart is still suggesting that we should be shorting rallies into this market. And there's still quite a bit of room for this market to fall. Okay, given that the dollar has about 2 points of room on the upside, 2 full points. That's quite a bit of room for the euro. When we look at the 4-hour chart of the euro, this is probably the most telling chart. We now have another supply zone sitting just above current price, which is right here. Oops. Okay, well, I think you get the point. For whatever reason, couldn't get that line straight. There we go. I'll fix it. Okay, this is a key level we'd want to watch going forward. If you're already short the euro from one of our opportunities above, great. No reason to get out of that position. There's plenty of room to the downside according to the chart. So this level comes in right here, right around 106.10. Okay, any questions on that? As a short-term trader, there are levels, if you look at your 5-minute chart above, I've got a level drawn just before that 106.10 area. So we were watching this early this morning, but the market didn't rally up here. This comes, well, you can see where it's at on the chart. Okay, this is the euro futures. And again, if you trade only the spot market, you're going to have pretty much the same opportunities here. Okay, same opportunity, same price. Here's that little 5-minute level that you would consider shorting against. Just make sure you're okay with the risk. The profit zone on these looks good. Looks on all these I'm giving you here, I would say that a minimum of 3 to 1, and probably more. Okay, we go down to our 4-hour chart. Again, we have our level sitting right there just above 106. All right, no questions on the euro. Again, it's just short rally mode. And when this market reaches a price level where demand exceeds supply, believe me, the chart will tell you that loud and clear. There is a level much lower right in here. You can see it. I'm surprised we haven't got here sooner, but you could see there's the number, there's the level right down there on the monthly chart. Okay. All right. Let's keep going. Any other market you want to look at, or do you want me to just keep going through my list? Doesn't matter to me. And we can try to stick to the spot markets for now. Most of them are painting a similar picture. Why don't we go to the Aussie dollar? Yeah, CFDs and futures are a little bit different. Most of the brokers, they own the trade stations and interactive brokers. There's many brokers that offer futures. Any broker that offers futures pretty much offers FX futures. I could be wrong, but I've never seen a futures broker that doesn't offer FX futures. All right, from everything I understand and see, they do. We do, yeah. We have daily trading and analysis sessions. A little bit different from what we're doing here, but informative, handing out trades to our students and all that. Let's go over to the Aussie dollar here. Notice we have a couple levels that we're dealing with in the larger time frames. Yeah, I'll put my email address in here. So here, hang on one second. If you have, some questions, you could certainly shoot me an email, questions like that, no problem. We probably don't want to take up trading time, though, with all that. So just, put in an email, not a problem. Just keep in mind, if you look at the 4-hour chart of the Aussie dollar, what's sitting above, right? Some nice supply zones are sitting above. And again, if we get a little pop in the Aussie dollar and the U.S. dollar continues to rally to that supply zone, you could see a nice decline in the Aussie. All right, again, the chart is telling us to short rallies, continued short rallies. Let's go to the euro yen. Just let this data populate. Okay. On the euro yen, this is a good market if you are active trading. I was looking at this one this morning. There are a couple opportunities that are kind of jumping out at us here. All right. If we do get a rally in this market, really watch this 122.50. This is an area where kind of a nice intraday short position. Anybody trade this market? You're looking at 50 up to about 71 on the stop. 72, I'm sorry. Make sense? We can put this in. We'll put entry stop target. So I want to go right here to here. There's that. There's that. And then we'll put a red line in for the stop. Is this helpful doing it this way? And we can kind of talk through it to make sure you understand it. Okay. So there's There's your supply zone with your stop above. And of course, a target would be back down here. Okay, so here's kind of the we can look at a larger time frame, but we would expect prices to come back down to, this level. The buyers are below this. Again, this is all just about where are banks buying and where are banks selling. Okay. All right, so nice big profit zone there to the downside. We'll leave that one alone. And let's move on to another market. Why don't we look at the Canadian? Okay. So the Canadian dollar continues to decline. Remember, this is expected. We've been in short rally mode in the Canadian dollar. The reason is when you look to the left, we have a number of fresh supply zones above. When we look to the left and higher, when we look to the left and lower, we don't have fresh demand zones below. So ultimately, we expect this market to decline all the way back down to here. Okay? Does that make sense? So this is a longer term kind of focus of the Canadian. But having said that, now we can go to the smaller time frames and have a pretty good idea of what we want to do. So let's do that. Okay. Why don't we start with this chart? Again, not a whole lot here on the 60-minute chart. Let's come back down here to a 10-minute chart, see if there's any active trading opportunities. It is a Friday afternoon. You do have a little supply zone up here. Rally base drop and then a drop base drop. So when you have those two combined, that's a pretty good opportunity, but I don't know that the Canadian dollar is going to get up there and turn anytime soon. But if it does, it's a good level. There was another market that I had. There was a really good setup coming up. And again, if you have any markets that you want to look at, just type them in the chat. Happy to go there. Where is that? I think it's. Let's keep going with the currencies. I'm sure we'll get there. The Canadian, yeah, we can look. Are you talking about the short-term level or the longer-term opportunity? Sure. Let's go there. So that'd be 132.20 with the stop at 132.25. And then a profit of at least 2 to 1 there. So this one looks like you're able to go for 3 to 1. And I would do that. Yeah, that's a short. Okay, let's pull up the pound. Wait for some more charts to come up. Okay. Do I take trades on Friday? Yeah, I'll take short-term trades early in the morning if there's a setup, but most of my trading is holding on to positions. So I'll get into a position, and if I'm in it for 2, 3 days or, 2 or 3 weeks, that's fine too. I'm looking for, bigger moves. But yeah, in the active trading side of things, I'll do stuff on Fridays if I'm around and in front of the screens, but that's not where my primary, that's not my primary trading. Okay. So, yeah, but Fridays are fine. What you'll find often is, and again, you have to be okay with the risk, is getting into key positions on Fridays into, larger time frame levels when they come up often turns into a great hold over the weekend. But you have to be very comfortable holding onto a position over the weekend and absolutely okay with the risk. And sometimes that risk goes beyond the stop. Okay. Again, if you know your supply and demand levels, it's typically not a big deal, but okay, let's keep going. So we are looking at the pound, and as we go down to the smaller time frames, again, this is more of a setup for next week, but you can see price rallied into this area of supply and fell pretty good. So if there's willing sellers here, there's obviously likely to be more willing sellers up here. So we have rally, base, drop, and then we have a base here too. So we will always take the beginning of that and then the top of this. Okay. And then we want our stop above the whole thing. We'll actually take this right up here because this is where prices fell from. You always want to focus on where those orders are. That's the key. Where are the orders? Okay. Yeah, for most of my trading, I am looking at the 4-hour, daily, weekly. Okay. Now, any short position in the pound, again, there's a pretty big profit zone to the downside, and we would look for the pound to make new lows as well. At least that's what the chart is suggesting. So this trade that I just showed you up here, remember, anytime I give you, we go over a supply or demand level, and it ends up being a trading opportunity, half of the reason it is because of that level. The other half is because of the profit zone with that level. Okay? I'm not sure. Let's see. Are you saying small time frame? Right. So but let's go on. We'll find others in other markets too. What are the markets that you guys trade? That'd probably be even a better way to go. Here is the Swiss, all the way, all the way back up now, and sure, yeah, we looked at the euro earlier, but we could probably take a quick peek at it again. Watch the Swiss a little bit higher. This is a very similar chart slash opportunity as the euro. Okay. Watch that next week though. Again, it's not likely to hit anytime soon. Just to make sure you have it out there. Yeah, we can. Let's look. Oil. We can look at oil. I'm just looking back. Yeah, why don't we pull up oil? We'll take a look at that. I trade crude oil a lot. It's a great market. Great levels, great everything. But I mean, they're all good markets. There's not really one market that's better than the other. Okay. First of all, take a look at this really nice daily chart of oil. And you can see that we keep rallying into this supply zone and falling. We're on our way back up here now. And if you remember the rules, we typically only want to take that first pullback into a level. But the most important thing is not to focus on how many times price has been back to a level. Focus on how deep price has gone into the level. Okay? Now we're talking real supply and demand. Remember, at each price point in this supply zone, there's a different amount of orders or available supply. Make sense? Okay. So when we go down to the smaller time frames, there is some really good stuff in oil, if you trade oil. So again, the pattern we're looking for, rally, base, drop. We have this other little base right here. So I'll put in the full trading opportunity here. There's that. With that. Okay. Now, where's the fresh demand zone below? Well, when we look down and left, we really don't have anything, until maybe down here on a smaller time frame. So we would look for, I'll just put a blue line in for the profit target. The reason I'm putting it there is because it's just before that demand zone. We don't want to exit the position at demand. We want to get out before the demand zone. Okay. And that's down here. All right, and then again, our stop would be just above the level, so 51.90, 40. So you probably want to add on 10 cents, so the stop would need to be around 52.50. Always make sure you're okay with the risk in crude oil. Okay, this is not a cheap market to get involved with, so make sure you're okay with the risk. And that goes for any market. All right. So we just looked at larger time frame crude, smaller time frame crude. Gold we can certainly look at next. The key market to start with in gold is the daily. As you can see, the circled area here is what is really below current price. Okay. And is that demand? No. Is there demand in there? Not on any larger time frames. We don't see any. Possibly on a tiny little time frame, but that's not a big deal. So what we do have, though, is two key supply zones above. That one and that one. And then we have our two key demand zones below that I'm sure you see on the chart. Actually, there's one demand zone below, but I really, if you look inside that yellow box, I really just combine two. Okay. So that's the larger time frame in gold. This is the daily. We're right in the middle of that. So when we go to the smaller time frames, what that means is we should feel comfortable buying or selling. In other words, going long or short, depending on where the levels are and what the profit zone is. Does that make sense? Because we're right in the middle of this, this big supply-demand curve here. Let me just read back. Hang on a second. I think I understand your question. No, we can be buyers at demand or sellers at supply, depending on if that level is fresh and if there is a significant profit zone. So now when we go to smaller time frames to map out a little opportunity, well, you know what? Let me go to this. Let me go to the continuous contract. It won't be so choppy. Okay. And so we look above current price. We really don't have a whole lot. We do have this. Actually, I spoke too soon. We do have this really nice rally-based drop supply zone. Okay. This would qualify as a pretty good level. Oops. There's that one. There's that one. And yes, price has been back there once, but because it just touched the bottom level and collapsed, I'd be more than comfortable shorting another rally into that level. Does that make sense? And then, of course, we already know that price has been down here, so there's obviously no significant demand above this price. And then we also have this pivot low over here. So we'd want to look to get out somewhere just before that pivot low. So again, you can see your risk reward in this one is that's not bad, right? Okay. So there's gold again. We went over a larger time frame kind of view and opportunity, and now a small time frame, look and opportunity. Why don't we go over to another market? Well, here, let me take you to another one. Anybody here trade the DAX? Now, this is a very big money market, so if you don't make sure you know what you're getting into before you trade this market. I love this market, but I know if some people aren't familiar with it, it can definitely be a little scary. So this is a big equity index market. Excuse me. It's obviously the futures for the German stock market. You can see we're coming into this, prior high up here. So we want to go back on a smaller time frame and look inside that area. For whatever reason, my 4-hour chart here is not updating. So we'll give it a little chance to update. But our 60-minute is, so we could just probably go right down to that. So now what we want to do, just to speed up the analysis, is put a horizontal line across the top and scroll back until we hit price. Now we see where price is at now. There's nothing great right here, but sitting just above is looks to be a quality area. So let's put remember this is that on the bigger time frame, this is what that rally base drop looks like. So this one will score out fairly high with our odds enhancer scoring system. Put our levels in there. And there you go. So that's a key level with a nice, really big profit zone to the downside. Okay. And you can see where that level comes in. I've got my prices on the chart here. And as we... no, you be careful with the whole concept of head and shoulders, just because that's always like multiple moves into an area, which means the supply in that level is probably gone after you have multiple moves into that area. That makes sense. Okay. And yeah, that looks great. And there's a huge profit zone on that one. So that would be big profit zone. Now remember, again, the challenge with the DAX is for a lot of people it's an expensive market. So a big stop there, prices a lot of people out of that, but that's okay. If you could take it, great. If not, that's okay too. And again, just make sure you're good with the risk. Any other markets, let's see, that we want to take a look at? Oh, natural gas, sure. Natural gas actually just hit our target. I know we've gone over this a number of times in here. So yeah, our target, I just took the lines out yesterday. But anybody with us here today that held on to this all the way? This was a multi-day trade. We were buying it here at the demand zone on the daily and then looking to sell it up here for a profit. The trade is now complete. That was a big one. Yeah, there's plenty of articles on the website, tradingacademy.com, and they're all free. I've been writing an article each week, and I haven't missed a week, and we've been doing that since 2006. So that's a lot of articles. Now that I think about it. Yeah, so let's go down to a smaller time frame, and you'll see where the supply is above. But we also now have some new demand below, which is great. But yeah, let's go down to a smaller time frame. Let's go with this 60-minute chart. I believe will show it to us. Yeah, let's just get rid of some old lines here. Make sure we have enough days. Again, the easy way to speed up the analysis and to make sure you're accurate, put a horizontal line right there. Scroll left. Until we see that line again. There it is. And now we've got a whole bunch of other lines. Let's just get rid of some of these. Not all of them. Okay, so yeah, so here would be some fresh supply above current price. And if you wanted to have a real tight level, that would be it. And again, it's a 60-minute chart, so it's not that tight. But we really wouldn't look at this area because this is already a pullback into that, right? Remember, the key is only sticking to fresh levels, and it's important. I find a lot of people in these webinars don't understand what a fresh quality supplier demand level is, and then of course the big profit zones. So that's a little bit higher, though. It's quite a bit higher than where we're at now. But again, as you've seen with natural gas, if you've been in that trade with us over the last few weeks, it takes time, but it works out fine. Okay, so that's likely to be the next stopping point above for natural gas. But keep in mind, there's a new demand zone that has formed below. So we'd want to continue to buy pullbacks, to demand zones like this before move up to that supply zone that I just showed you above. Big move, takes multiple days to play out, but that's it. Whoops, I almost canceled out the charts there. All right, and yeah, and again, it's all about that picture that represents a significant supply and demand imbalance. And the reason why I talk about it so much is because that's how I started my career more than 20 years ago now on the trading floor of the Chicago Mercantile Exchange, handling institutional order flow from banks and institutions. I was on that side of the business. I just trained my eye to see what that picture looks like on a price chart, right? Having the orders. Possibly moving up because of the winter season, but I would bring all that seasonal thought in, needs to be very, very, very secondary. Always go with the real supply and demand picture on the chart first, and anything else, any seasonal analysis or correlations or anything like that, keep that, a distant second. When you do it that way, you'll see that the puzzle, it's the way the puzzle gets put together tends to work out pretty good. Okay, often it lines up with the seasonal or correlated, correlation analysis. Sometimes it doesn't, and that's okay. Either way, you're going to take the same trade. As a short-term trader, if you look at the 5-minute, we just dropped out of this little area right here. So possibly, if you're looking at short-term trade natural gas, you might have an entry just a few cents higher into this, but you need to stop above the area, and then you're looking for about 2 to 1 there on the downside. All right, just go down to that the origin of that last rally or the opposing fresh demand zone. Okay. All right. Well, I think we went through plenty of markets here. Again, you have my email address in the chat. if you have any questions or want to send me a chart or something, if you're having any kind of challenges with your trading or financial goals, certainly let me know, and I'll be happy to help if I can. And keep these bigger, you know, picture opportunities in mind. Okay. Because for those that have been with us for years, you see how they work out. All right. Have a great day, everybody, and we'll see you next time.